Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model complex data cycle positioning for the 1st of the 2nd to the 5th of the 2nd 2021. I've started to write this up. We're going to start it as we go through the various complexes. The first one then is China. Over January then, the tier 1 and tier 2 data. So this is basically our model version of the economic calendar. So China then in January, the month that's just gone, tier 1 we modelled it at -5 and tier 2 +10. And so far we've had the first week of February, 1st to the 5th, China tier 1 0 and tier 2 0. So we've got a neutral situation in going forward on China. Excuse me. And previously in January we had an improvement, and now we're at a sort of a plateau and a neutral situation. So moving on then to the dollar. In January then, tier 1 was -5 and tier 2 was very large, +24. So we had strong tier 2 data and arguably weak tier 1 data. And so far now we've got in the first week we've got tier 1 data at +1 and tier 2 data at +17. So the dollar is starting to perform in terms of the data cycle very well, very strongly. And bear in mind that this week we had the NFP on Friday, which was slightly weak, but the actual underlying data for the dollar during the week was very strong, and this is borne out in our model cycle. So that's where we are for those two. So we're going to stop and write up the next two. Right, welcome back. I've written up the German data and linked it excuse me, to the European data as a whole. So that's the European Union bloc, if you like. German data then, January, tier 1 +4, tier 2 +7. So we had quite a strong month of January for Germany, and so far in this week we've had +2 for tier 1 and -4 for tier 2. So we've got a mixed picture now in the German data. We've got strong tier 1 data and deteriorating tier 2 data. So if you look at the EUR block as a whole, then January we had -6 for tier 1, which was relatively weak, but we had +5 on tier 2, slightly balancing it out. And so far in this period, in this week, then we've had +10 for tier 1 data, which is significant improvement, and +3 for tier 2 data. So to sum up then, the German situation is we had a strong German month in January. We've got strong tier 1 in this week for Germany, but we've got a mixed outlook on the tier 2. We've got a deteriorating outlook for tier 2 data. So Germany is sort of in the balance, and the Eurozone as a whole then, January tier 1 data was -6, which was relatively weak, but it was balanced by reasonably strong tier 2 data at +5. And now we've got strong tier 1 Euro block data for tier 1 +10, and reasonable strength tier 2. So it's arguable that Germany is starting to roll over in terms of data, and there's a bit of lag in the overall European bloc. So So this is something to bear in mind as well. And bear in mind that Germany is viewed as the sort of the engine of Europe, because of its industrial power and base. So you could argue, you were seeing positive data come out in Italy and places like that, which whilst is good for Italy, obviously as a country, as a bloc, they're less significant. So it is possible that you're going to see that this overall data for the European Union was lagged, and that we're going to start to see a rollover in German data. But that's something to bear in mind for the future. So you've got a mixed picture, if you like, for Germany and the European Union. So let's move on to the next two then. Right, welcome back. We've written up the next two. Forex data cycle positioning for the yen, JPY, and the pound GBP. So let's look at the yen first then. Last month then we had neutral tier 1 data, but we had a very, very strong showing on the tier 2 data in Japan. So the yen was looking healthy overall, and so far we've got a neutral base on both of these. So you could argue that the yen complex in terms of the data cycle is starting to level out and tail off a little bit. So that's something to bear in mind there. Now the pound, last month then +3 tier 1, +5 tier 2, and remember, if the bulk of that information there is based on technically fairly spurious data around claims and unemployment, which are propped up by the government furlough scheme. So that may be a little bit misleading. And we've now in this week we've got a neutral situation here for tier 1, and +2 is on the tier 2, which is a slight improvement. So overall we're looking at that sort of situation. If you're looking at the yen came up last month and it's subsequently plateaued. The pound arguably was steady to rising last month, depending on how you view the data, and it's now fairly steady here as well. So we'll move on to the next two. See you in a minute. Right, back again. We've written up the CAD, Canadian dollar, and the Australian dollar, the AUD. Starting with the CAD then, last month we had tier 1 +8, tier 2 -1, and so far we've got -4 tier 1 and +2 tier 2. So arguably we had a strong showing on the tier 1 data in the CAD last month, and we've got a deterioration so far this week, significant deterioration in tier 1 and just a minor pop in tier 2. So the CAD is sort of coming off to declining in terms of the data cycle as well. Looking at the AUD then, in January we had +2 tier 1, +6 tier 2, so that was quite strong, reasonably strong anyway, and we're now continuing with a bit of strength in the tier 1, +3, and a neutral on the tier 2. So the AUD is starting to show signs of life in terms of the data cycle. And we'll talk about all this in when we round up in a minute. So that's those two. Let's go for the final two pairs. Right, back again. Last two pairs then, New Zealand dollar and Swiss franc. So New Zealand dollar then, January tier 1 +2, tier 2 -2, mix then, and then this week so far we've got an improvement in the tier 1 +4, and a significant improvement here because we've gone negative to positive, +2 on the tier 2. So the New Zealand dollar is, from a data cycle perspective, is improving. And if you remember, they had that 3-month data this week, which was quite significantly improved on the employment. Now the Swiss franc, January then, 0 for tier 1, -2 for tier 2. And this week we've had 0 tier 1 and +2 tier 2. So fairly static in tier 1, neutral, and an improvement in the Swiss franc to +2 on the tier 2, but nothing to write home about really. So let's make the best of this then. So if we get the it looks to us like China, the China data cycle improved and is now sort of in a maturity phase almost. So it's sort of rolling back down. But the dollar is really starting to steam. Arguably, what have we got? We've got this week it was +1 on tier 1 and +17, and it was a strong January as well in terms of tier 2. So the dollar, and the only slight caveat with the dollar is that we've just had this non-farm payroll which came in rather weak, but the ADP was very strong, and they're slightly different in terms of measures, but people tend to lump them together and try to use them as a forward predictor. But anyway, we believe the big takeaway then is we've got a resurgent USD, and that's quite likely to be borne out in the flows next week. Now, European wise, Germany's starting to show signs it's creaking a bit at the top, so it's starting to roll a bit. And the European Union as a bloc, you've got certain places like countries like Italy coming up quite nicely, and France is mixed, but the German is where the main focus is, and this has improved and now is starting to roll back. So it's likely that we're going to see the overall EUR situation roll down as well. So what have we got next? Yen. Well, the yen is pretty neutral all round. Apart from last month, it was starting to really go on the tier 2. So there's a bit of a lag there. So and the yen has been soft via the equity transmission. So you've had this significant pump in equities, which normally translates into a weaker yen, which is effectively what we've been having. The pound then. The pound, we had a slight distortion in the claimant and the unemployment due to the furlough. Take your pick on whether you believe how much of a distortion that is. So we had slightly positive data there, and so far we've got a slight improvement in tier 2. So the pound is sort of hanging in there in a neutral to positive manner. The CAD then, the CAD last month was positive. But it's starting to look a bit moody now. The tier 1 data has dropped off. So, and obviously the CAD may get a boost from the oil price, which is starting to pump up quite nicely and may continue. So that may take the edge off any downside in the CAD complex. The AUD then starting to show signs of life, as we said, and if we can maintain this sort of global momentum in terms of recovery from the COVID, then the AUD should start to move in a positive direction. NZD likewise, and NZD's had the bonus of this employment data, but quite frankly, the NZD is quite a high as a complex anyway in terms of complex positioning. So remains to be seen. And the Swiss franc is the highest of them all. The Swiss franc's very strong across the board. It's about 76% from the modelled floor. So the Swiss franc's got its work cut out to do, but it generally is sort of neutral to slightly positive on the Swiss franc. So hope that was useful to you. We're going to obviously do the Monday morning market preview. Hope to see you then. So thank you very much.